Good morning. I want to make another video for my week ahead breakdown, what I'm expecting in the week to come and what has happened in the week before. So this is our monthly chart for the dollar index. We have essentially the same thing that we had last week, with the difference being that we actually closed bullish for this week, but not with the conditions that I was looking for. In my case, the specific condition I wanted to see was a closure above this week, and there's an internal buy side liquidity as well on a daily chart. It's not visible on this time frame, but this swing high, I was looking to see if we could close above this swing high. I also drew up this level last week, and I believe the week before as well, where I said must close above the daily to feel safe, which is the consequent encroachment of the weekly wick. We have this long wick here from the top to the body on the 2nd of October. Measuring that long wick from there to there, we can see the consequent encroachment, which is the halfway mark. The 50% is the 106.761. So I was looking to see if we could close above that specific level, which is also where ICT Michael was wanting to see the dollar close above for him to be interested in any longing opportunities on the dollar index. But of course, this closure is not based on the weekly time frame. He wanted to see that closure happen on the daily time frame. But anyway, last week we got a dip down on Monday into the weekly fair value gap in the form of a BC. From this candlestick's high to this candlestick's low, we have an inefficiency there in the form of a BC. So we respected it and rejected aggressively to the upside. Zooming down even more on that area, when we traded to it, I did make a video at this point. I believe it was an intra-week update where I said we had perfectly equal lows residing there, and when I saw liquidity sweeping one last time, I assumed this was a turtle soup, and I actually took the trade from this point to sell the pound. So I saw GBPUSD here, and yeah, I also had this breaker highlighted on the 15 minutes, but we never did come back to it. So the markets were really bullish that this inefficiency never needed to be repriced to the going to the upside. So let's get rid of that now. Going back to the daily chart where we were, we can also see that in the last 2 days or so, we created a fair value gap in the form of a BC. After rejecting from this level, this was now on Wednesday. On Thursday, when this candle closed, I was actually a little disappointed because I wanted to see us close above this line, this 106.761 level. Finally, I would have been a lot more confident if we closed above this, because going into Friday, we can see price came back, essentially filling up the entirety of this daily buy side imbalance. From this candlestick's high to this candlestick's low, we have a BC, a fair value gap there that we fully repriced and rejected from. But I really didn't think we were going to fully sink into it. I assumed and wanted to see us only test it a little bit before pushing higher, not even reaching the consequent encroachment. I wanted to see something like that, but we didn't get that. So going into next week, I would like to see us firstly trade maybe one more time to the top of the BC. Does not need to do that though. We could just open up next week, take out the buy side, this internal buy side liquidity from that swing high over there, and at the same time close above the 106.761 level, the white line, that any inefficiencies made there could be used to support higher prices. And I really want price to run for the buy side liquidities quicker this time, because next week will be the first week of November, which I believe has NFP on it in the calendar. So this is what we have scheduled for next week. Monday, we have CPIs on Euro at 4 a.m. We have a few reports coming out on the yen. On Tuesday, we have GDP, New Zealand dollar, and then Wednesday we do have PMI numbers coming out for the manufacturing index. So yeah, Friday we do have non-farm payroll, non-farm employment change. So we do have non-farm next week with PMI, services PMI. So next week is a little bit packed, and whether this NFP or PMI numbers come out strong or not, I would like to see us fully take out the buy side liquidity on the dollar index, that we can expect some form of retracement or reversal or liquidity sweeps to the downside because of NFP, but then a continuation to the upside from after NFP. So ideally I would like to see something like so on Monday, Tuesday and Wednesday, and then Thursday a probable consolidation, so that Friday can do a quick liquidity sweep before continuing to the upside. So I don't mind seeing a structure like this, but getting a closure above this white line before Wednesday would be ideal, or by Wednesday would be ideal for me to have the confidence to take dollar to the upside. One interesting thing I wanted to point out on the 1 hour chart is patterns traders. So let's say you are trading with a pattern right now. You would probably look at this swing high. This was on Thursday. Look at this swing high on Thursday. Look at this swing high on Friday. So we have internal liquidities here. Then on Friday, we swept the liquidity to the outside. So you could call this a liquidity sweep at this point. And then we got a displacement to the downside, a closure below the previous bearish candle before the expansion to the upside. So a closure below this, making this area to become a breaker, a bearish breaker. So if you're a patterns trader, this would be an indication to take price to the downside. Of course, the same goes with like a 2022 model. This is just me trying to practice what a high probability breaker is the past couple of days. So you might consider shorting the dollar from here. But at the same time, we have the opposite. We have a liquidity sweep. We swept these sell side liquidity, expanding to the downside. And now we are finally getting a displacement to the upside, creating a market structure shift internally with a fair value gap, and we could see price trading higher. So right now, because of this structure, I would really like to see a closure above this 106.761 level for me to be confident that anything indicating more down move on the dollar has been violated and we are really expanding to the upside. I wanted to use that to confluence with Euro USD. Of course, everything I just mentioned on the dollar, I would like to see the opposite on Euro USD. So I'd like to see us fall off on Euro. I don't like how we are looking bullish here, how market structure seems to be shifting to the upside, which is also why I will be sticking with the euro. Why I'll be sticking with the pound and not the euro, because moving on from this, there isn't much else for me to add here besides the fact that I would like to see lower prices. And well, while we're here, I also wanted to add the same thing that I've been saying the past couple weeks. The same way that I'm looking for a closure above the 106.761 level on the dollar index, on euro, I'd like to see this act as an inversion fair value gap. This daily BC over there, I'd like to see it act as an inversion, meaning I'd like to see a closure below it for me to really take price to be heavily bearish from there. So if we can get a closure below the fair value gap, the fair value gap here to act as an inversion, then I'll really consider price to be bearish. So that's all I have on euro. We also see the same sort of fair value gap here filled completely, and now want to see an expansion to the downside. So moving on to pound GBPUSD, you can easily see why I prefer it going down to the lower time frame and being the weaker sister. We can see that pound, yes, has not taken out this swing low for us to confirm a market structure shift of some sort, but pound has remained stably weak. Any push to the upside was not as dramatic as euro was, or as dramatic as the dollar index itself was. It was resisting any push higher in a way, and could not see much higher prices from here. At the same time, we have this higher time frame breaker. This is a 9-hour breaker. The last down close candle before an expansion to the upside, sweeping liquidity, then a displacement that closed below it is the breaker. So inside of here we had a breaker, and we are still sitting inside of it. Well, we rejected from it here once before with just a single wick, and we are coming back to it again with the same sort of idea. The stop loss maybe being here. Of course, a breaker's stop loss is usually at the swing high because it has swept liquidity already, so there's no reason to sweep it yet again, right? But in this case, being as heavily bearish as I am on the pound, I don't expect us to even take out this high from this bullish candle on the 9-hour chart, and I'm expecting a continuation to the downside. So since we've already covered the higher time frame draw, and if you have not seen, you should watch my previous videos where I covered that even in more detail. So going into next week, I'm paying attention to this order block on the 1-hour chart, this bearish order block, and I'm looking to see if price can reject from it. Of course, we may not get exactly what I'm looking for, but I'm paying attention to I'll be paying attention to the 1-hour chart. We have inefficiencies here in the form of a CB, this tiny one, and we also have this one, but I'm paying more attention to the order block as opposed to the fair value gaps to look for lower prices from there. So this is all I have here, but let's do a quick top-down view on what has happened the week before. On a weekly chart, it doesn't really look like much has happened because we've been somewhat consolidating or choppy here. But on a daily chart, we did have one of the best setups, well, one of the setups that I actually liked and caught. In this case, we have this order block on a daily chart, right? So paying attention closer, we can see that at this point, this was the 11th of October 2023, and this was the 24th of October. So 11 and 24. 11 and 24. Then when we go to EURUSD, at the same times, we can see on the 11th we had that high, on the 24th we had a new high. So there was an SMT divergence between the euro and pound. This was already the confirmation to me that the fact that euro is willing to make a new high while pound wasn't able to do the same showed me that pound was even more weaker than euro on a high time frame. So if I'm looking for sells, if I'm looking for shorts, I'll be looking for it in pound as opposed to EURUSD. So I'll be looking here at GBPUSD for lower prices. And while on this time frame, we can see many things aligned for me to take this 9-hour breaker to be a high probability breaker. Because on a daily chart, we can see it's an order block. We can clearly see that we closed below this candle, creating an order block with a tiny fair value gap from there to there. So this area to me would be highly sensitive for lower prices. And I would not like to see price even go above this candle, or we can just call it the measurement of this order block, this giant daily order block, the 50%, which is there, 1.2201. That's the mean threshold of the order block. So this becomes my invalidation point. Let's actually put that out on the chart. Label that as invalidation for the pound, 1.2201. That becomes, wait, I hope it's 1.220. Well, oh, 22011. Sorry. I want to make sure it's a very specific level and not just some random area. So that becomes my invalidation because that's the mean threshold of the daily order block going into next week. And of course, I'm targeting the sell side liquidity first, internal sell side, then external sell side liquidity, and then of course going out, zooming out to the weekly chart, we have that sell side liquidity. That is my terminus where I was looking to close off, but I did outline the mitigation block residing there and the probability of us reacting from it. So I would take partials here. If I was a swing trader, I would heavily consider the partials taken off from here, but that becomes my target. Take profit levels. Every target still remains the same to the upside on the dollar and the same on the euro. So now let's move on to the indices, starting off with E-mini S&P 500. With the S&P 500 on the weekly chart, even the monthly chart, we perfectly smashed below two swing lows that we were looking for, and it seemed even better to trade the indices as opposed to the currency pairs because we had a better reaction, and we finally swept that swing low, the sell side liquidity there. We even closed below it, and this swing low on the S&P 500, actually starting with the weekly chart, we can see that the previous weeks, the week before, I believe this was CPI week or something, where I wanted to see us reject from this weekly order block, which is a daily inefficiency as well, and trade lower. So we rejected from it, and we've been reacting off of it since, and now cleared the sell side liquidities. On a daily chart, we had last week open up On Tuesday, we created the high of the week inside of this daily inefficiency, this daily gap in a form of a sell side imbalance residing at this level, this area. We have this daily CB and rejected, price rejected from that point. Let's actually label that while we're here as a CB from the daily time frame, and reacted from there, pushing lower. So let's go down to lower time frames. We have here Monday's price action, a consolidation. We created a high on Tuesday. We actually swept Monday's high as a turtle soup, but then at this point, it was when the market closed at 4 p.m. we had an even better push to the upside. And keep in mind that this was Tuesday, so I really liked when that happened, making me take it as Tuesday high of week. We can see up there that's Tuesday, this is Monday. So Tuesday opened up, we swept high, swept the Monday's highs, and immediately rejected from me, making me really confident that that's the Tuesday high of the week. Then of course, when Wednesday opened up, we traded above the midnight price into this inefficiency, and I actually took this trade, and I'm actually holding it still. When we traded above the midnight price into this fair value gap there, this 1 hour CB from the candlesticks low to the candlesticks high, pull that out in time. We've got a CB, an inefficiency above the midnight price. So this made me sell the S&P 500 and this placed lower. The other opportunity that I saw and took was at this point when we closed on Wednesday. We had a new day opening gap, and this was after FOMC. Well, no, not FOMC, a speech that happened at, I believe, 4:35 p.m. New York local time. So after the speech happened, firstly, before the market closed, we had this fair value gap, this CB, and I saw price returning to it. I knew it was a little more risky, but when I saw the closure below the swing low, below Monday's low, it was confirmed to me bearish price movement from here. And then I saw that we reacted from this CB, and everything else after this reaction is a balanced price range. We had a wick, there's no inefficiency created, a weak body, until this point we created an inefficiency. So when price traded into it, I also jumped in on this. I pyramided from this original trade by getting in here, and we had a gap after midnight. So when I saw the gap trading into Asia and continuing to the downside, when London session opened and started chopping around, I was looking to see if we can trade back to the new day opening gap from when we closed on the night before to when we opened, which was actually here. Pulled that out, and when price traded just into it, I did not wait for the consequent encroachment or the fill or anything, but I was live streaming this, so I waited for the consequent encroachment on the NASDAQ, and I took that as well, but I took this one at the entry. So yeah, but then after that, price just kind of chopped around, didn't really do much, but finally displaced lower going into lunchtime. Got a retracement after lunch, got an order block entry. I scalped to this to the downside, but I exited at some point here. I did not wait for sell side. And yeah, going into Friday, I did not get an entry at all on Friday. So this was basically what happened last week. And now I'm going into the new week. Of course, I still have sell side objectives. We have these relative equal lows on the daily and the weekly chart. I'm still looking to see if we can come to this area. And the other areas that I'm paying attention to is of course the daily fair value gaps. We have two of them here actually. We have this fair value gap, and we also have the lower fair value gap that is with the new day opening gap. I honestly would prefer to see us use this fair value gap going into next week to see lower prices. Of course, right now we are in a daily buy side imbalance over there, but I'm not looking to see that being respected. I'd rather see that violated and used as an inversion to follow our prices. So going down to the hourly chart, actually, while we're here, we have the daily fair value gap residing in there. For us to trade back into this and trade lower, we would probably have to sweep not only these liquidities here, not just Friday's highs, but we might have to sweep Thursday's highs as well, trading into the higher one, which I said I didn't want to see. But honestly, being completely transparent, I do have pending orders set at this point. At this new day opening gap, or let's just call it a volume imbalance that was created. But the new day opening gap in reality is actually from the closure to the opening price. So we got that, but let's label it as a volume imbalance. So I actually have a pending order set for this move, and I would not be surprised if this happened, because we could have price trade higher into this or into this inefficiency, then fall off from there. Then during NFP, we might then finally trade into that daily fair value gap that I was pointing out earlier, before seeing a continuation to the downside. The same thing that I mentioned that I want to see during NFP on the dollar index, that everything might go exactly as planned and without much retracement, but NFP taking us back down on the dollar or back up on the indices before a continuation to the opposite. So that's all this is what I see on S&P 500, and on NASDAQ I'm going to work on the 1 hour before going up, before going higher to higher time frame. So on a 1 hour, the same way that I don't want to see too much of an up move is the same way that I don't want to see that happen on the NASDAQ. So NASDAQ, we had a swing high there that we just swept. We got a displacement to the downside, a closure below the swing low, confirming a market structure shift at this point with a fair value gap and a breaker block. So we got a breaker there with a fair value gap. We have not tapped into the fair value gap yet, but I'm looking to see if price can stay, if the bodies of the candles can stay within this entire area, within this entire breaker, and continue to the lower portion, to the sell side liquidities that I pointed out. But now that we've gotten that out of the way, let's do a proper top-down view on what has happened and what's to be expected. So firstly, on the NASDAQ monthly chart, we had this giant buy side imbalance from the candlesticks high to the candlesticks low, and I mentioned how I'll be paying attention to the consequent encroachment of it. The 50% area of this gap is exactly 14172, which we traded to, and we passed it actually, I believe, on Friday or Thursday, when we made the low of the week, actually, yeah, on Thursday. So if you remember my older videos, I was looking to see how we trade within this area and how we react off of the consequent encroachment, and if on a swing position, a possibility of taking partials at this point. But my target is still this sell side liquidity. Well, it's a sell side liquidity on a lower time frame. So going down to the weekly chart, we have one of the stronger signs that I was looking for. Actually, we got a closure below the weekly buy side imbalance that we have here, and I wanted to qualify that as a possible inversion fair value gap. So the fact that we got a closure below it, yes, we tapped into the consequent encroachment of the, I don't know what this is doing here, but yes, we tapped into the CE of the monthly gap, but we did close in the previous week below this BC. So I'm looking to see if price can use it as a resistance in a way for lower prices. So this is what I'm looking for going into next week. And I still cannot see much here, but going down to a daily chart, it's clear how order flow moved similar to the S&P 500. So we got Monday's opening price, and then on Tuesday we spiked higher into this daily BC. And for those that do remember my midweek update, I said that I wanted to see if we could clear Friday's highs into that 30 minutes. I pointed this exact area on my previous video. For those that are interested, it will be linked in the description. But I pointed this area to see if we could sweep these relative equal highs into an inefficiency on a Tuesday. So we got exactly that, and displays to the low, to the downside. So yeah, and that area was also within a daily fair value gap. So even if you didn't want to be as precise as this, you could have just taken this area. And I did take this trade. Actually, I set a pending order there overnight. I got tagged in, but I took my partials off at this swing low and left the rest running. So that's what I'm looking for going into next week, respect of this inversion fair value gap as the high of week and the continuation to the downside. If this area is what I'm looking to see to be the high of the week, the inversion fair value gap from a weekly perspective, then I don't want to see this swing high swept going into next week. So my invalidation point in a way on the NASDAQ would be the swing high. And yeah, that's all I have for now. I don't really have anything besides these possibilities. So good luck and good trading.